Vietnam was once seen as the clear winner of the US-China trade war. As the two largest economies in the world clashed, Vietnam emerged as a beacon of opportunity. Companies, eager to avoid the rising tariffs and uncertainties, began to look for alternative locations to set up their manufacturing bases. Vietnam, with its strategic location, low labor costs, and improving infrastructure, quickly became an attractive destination. As tariffs rose between the world's two largest economies, companies looked to diversify their supply chains. The shift was swift and significant. Factories that once operated in China began to relocate to Vietnam, bringing with them jobs, technology, and investment. The Vietnamese economy started to boom, with industrial parks expanding and new factories being built at a rapid pace. Vietnam, with its low wages and proximity to China, became a magnet for foreign investment. The influx of foreign capital transformed the landscape. Workers found new opportunities in the burgeoning manufacturing sector, and the country saw a surge in exports. Products labeled "Made in Vietnam" began to flood global markets, from electronics to apparel. Factories sprang up, churning out everything from smartphones to sneakers. The rapid industrialization brought prosperity to many, lifting thousands out of poverty and creating a burgeoning middle class. The streets of major cities buzzed with new businesses, and the ports were bustling with activity as goods were shipped worldwide. But the winds of trade have shifted once again. The global trade landscape is ever-changing, and Vietnam's fortunes have taken a turn. The initial euphoria has given way to new challenges as geopolitical tensions continue to evolve. In 2025, the U.S. imposed new tariffs targeting Vietnam and other Southeast Asian nations. These tariffs were part of a broader strategy to address trade imbalances and protect domestic industries. The impact on Vietnam was immediate and profound. Exporters faced higher costs, and some companies began to reconsider their investments. The once promising economic boom has hit a wall. Factories that were once bustling with activity now stand silent. Workers who had found new livelihoods are now facing uncertainty. The economic ripple effects are being felt across the country, from urban centers to rural areas. Vietnam now faces a dilemma caught between the two superpowers. It must navigate a treacherous path to protect its economic future. The government is exploring new trade partnerships and seeking ways to mitigate the impact of the tariffs. The resilience and adaptability of the Vietnamese people will be crucial as the nation charts its course in these uncertain times. The US-China trade war was a boon for Vietnamese manufacturing. Global companies, eager to avoid tariffs and diversify their production, poured billions into the country. Samsung, Intel, LG, and Foxconn all set up major operations in Vietnam. Nike and Adidas shifted production from China to Vietnamese factories. Vietnam's economy surged, exports soared. The country became a critical link in global supply chains, particularly for electronics and apparel. Vietnam's success story was a testament to the power of globalization and the relentless search for low-cost manufacturing bases. In April 2025, the Trump administration dropped a bombshell. The announcement came as a surprise to many, shaking the foundations of international trade relations. Citing a national emergency and massive trade deficits, Trump announced sweeping new tariffs on imports from various countries. The administration argued that these measures were necessary to protect American jobs and industries from unfair foreign competition. Vietnam was hit particularly hard. The Southeast Asian nation had been enjoying a period of rapid economic growth, largely driven by its booming manufacturing sector. A 46% tariff was slapped on a wide range of Vietnamese goods, including textiles, which are a major export for the country. This move was seen as a direct attack on one of Vietnam's most vital industries. Footwear and electronics were also targeted, two sectors that had seen significant investment and growth in recent years. The tariffs threatened to disrupt supply chains and increase costs for consumers and businesses alike. The move sent shockwaves through Vietnam's business community. Companies that had invested heavily in expanding their operations were suddenly faced with the prospect of reduced access to one of their largest markets. The tariffs threatened to unravel years of economic progress and cast a shadow over Vietnam's future as a manufacturing powerhouse. Factories that had been bustling with activity were now at risk of closure, and workers faced an uncertain future. The message was clear. Even countries once seen as beneficiaries of the US-China trade war were not immune from Trump's protectionist policies. The tariffs on Vietnam served as a stark reminder that the global trade landscape was becoming increasingly unpredictable and fraught with tension. As businesses and governments around the world scrambled to respond, the long-term implications of these tariffs remained uncertain, leaving many to wonder what the future held for international trade. The impact of the tariffs was immediate and severe. Vietnam's benchmark stock index plunged 8.1% in a single day. The Vietnamese dong weakened against the US dollar. Foreign investors, once so eager to invest in Vietnam, became wary. Export orders slowed. Factories faced the prospect of layoffs and closures. The tariffs threatened to disrupt Vietnam's carefully constructed supply chains and erode its hard-won competitiveness. The economic miracle that had transformed Vietnam was suddenly in jeopardy. As Vietnam grappled with the fallout from the US tariffs, its economy faced significant challenges. The tariffs had disrupted supply chains, increased costs for businesses, and led to a decline in exports. Factories that once buzzed with activity were now struggling to keep up with the new economic reality. The Vietnamese government was under pressure to find solutions to stabilize the economy and support its industries. Amidst this turmoil, China saw a chance to regain lost ground. The Chinese government, always strategic in its economic and geopolitical maneuvers, recognized that Vietnam's crisis could be an opportunity to strengthen its influence in the region. Chinese businesses, too, were eager to explore new avenues for investment and trade. Beijing had long viewed Vietnam with a mix of admiration and suspicion. On one hand, Vietnam's rapid economic growth was impressive and offered lessons for China's own development. On the other hand, Vietnam's success had come partly at China's expense, as companies relocated from China to Vietnam to escape rising labor costs and trade tensions. Vietnam's economic rise, fueled in part by companies fleeing China, had not gone unnoticed in Beijing. The shift of manufacturing bases from China to Vietnam had been a point of concern for Chinese policymakers. They were keenly aware that Vietnam's growing industrial base could challenge China's dominance in certain sectors. Now, with Vietnam on the back foot, China sensed an opportunity to reassert its influence. Chinese officials began to engage more actively with their Vietnamese counterparts, proposing new avenues for cooperation. High-level delegations were dispatched to Hanoi, and a series of meetings were held to discuss potential collaborations. China offered Vietnam economic lifelines in the form of infrastructure investments, trade deals, and financial aid. These offers were designed to help Vietnam navigate its economic challenges while also binding it closer to China. The proposed infrastructure projects included new highways, railways, and ports, which would not only boost Vietnam's economy but also enhance connectivity with China. Additionally, China promised Vietnam access to its vast market. Vietnamese goods, from agricultural products to manufactured items, were given preferential treatment in Chinese markets. This access was a significant incentive for Vietnamese businesses, which were eager to find new customers amidst the economic downturn. China's Belt and Road Initiative, once viewed with caution in Hanoi, suddenly looked more appealing. The promise of investment and development under the initiative offered a way for Vietnam to rebuild and grow its economy. As Vietnam considered its options, the allure of Chinese support became increasingly difficult to ignore. Vietnam suddenly found itself caught in a geopolitical tug-of-war between the United States and China. Washington, eager to counter China's growing assertiveness, saw Vietnam as a key partner in the region. The U.S. had provided Vietnam with military aid and supported its claims in the South China Sea. But the tariffs had strained the relationship. Vietnam was now being asked to choose sides, align with the U.S. and risk Chinese retaliation, or move closer to China and jeopardize its economic relationship with the West. It was a delicate balancing act with high stakes. The U.S. tariffs on Vietnam had far-reaching consequences, sending ripples across Southeast Asia. Other countries in the region, including Cambodia, Laos, and Myanmar, were also targeted with tariffs. These countries, all heavily reliant on trade, feared economic disruption. The tariffs threatened to undermine regional economic integration efforts, such as the ASEAN Economic Community. The U.S. actions also raised concerns about rising protectionism and a potential trade war in Southeast Asia, a region that had enjoyed decades of relative peace and prosperity. Faced with mounting economic pressure, Vietnam scrambled to find a solution. The government entered into negotiations with the U.S., seeking to reduce or eliminate the tariffs. Vietnam pledged to increase its purchases of American goods, including liquefied natural gas and agricultural products. It also promised to address U.S. concerns about currency manipulation and intellectual property theft. Whether these concessions would be enough to satisfy the Trump administration remained to be seen. The trade war dilemma facing Vietnam is a microcosm of the broader geopolitical shifts underway. The US and China are locked in a battle for global dominance, and smaller countries like Vietnam are caught in the crossfire. The era of globalization, characterized by free trade and interconnectedness, is giving way to a new world order marked by protectionism, regionalism, and great power competition. Vietnam, once a symbol of globalization's promise, now finds itself on the front lines of this new era, forced to navigate a treacherous path between giants.